Kita akan teruskan dengan perkembangan seterusnya di mana US stocks rebounded on Tuesday as a spate of quarterly earnings reports and hints at the de-escalations of US-China trade tensions brought buyers in from the sidelines. A broad rally boosted all three major US indices by more than 2% as investors look past Trump's ramp-up rhetoric against Fed Chair Jerome Powell, who is widely considered a stabilizing force for the markets.
Minneapolis Fed President Neil Kashkari, when asked about Trump's attacks on Powell, said the Fed's independence is foundational to better economic outcomes. Having been battered for weeks by the White House's erratic and multi-front tariff disputes, the S&P 500 is currently about 14.4% below its record closing high reached on February 19. Treasury Secretary Scott Bessent said that while trade negotiations with Beijing will likely be a slog, he believes that there will be a de-escalation of US-China trade tensions. Those uncertainties helped prompt the International Monetary Fund to slash its forecast for US economic growth to 1.8% in 2025, citing the impact of US tariffs, now at 100-year highs.
Well, this earnings season is going to be tricky. Everything that happened in the first quarter happened in a different world from the one we're living in today. And to the extent we're going to get guidance, a lot of companies are going to offer different guidance horizons, different kinds of guidance, or they might rescind it altogether. So you can still learn a lot from earnings season. I think the way that CEOs and CFOs are talking about the landscape is going to be really insightful. The way that people are talking about the consumer, the state of the labor market, the things that we cared about a lot prior to the trade and tariff war. But it's going to be a little less informative if you remember those early COVID earnings seasons where a lot of these corporate leaders were kind of just throwing their hands up because the environment was so uncertain.
So far, 82 of the companies in the S&P 500 have reported. Of those, 73% have beaten expectations, according to LSEG. Analysts now see aggregate S&P 500 earnings growth 8.1% for the January-March period, down from the 12.2% growth forecast at the beginning of the quarter per LSEG. According to preliminary data, the S&P 500 gained 129.13 points, or 2.50%, to end at 5,287.33 points, while the Nasdaq Composite gained 429.52 points, or 2.71%, to 16,300.42 points. The Dow Jones Industrial Average rose 1,013.56 points, or 2.66%, to 39,183.97. All 11 major sectors in the S&P 500 advanced.